Deepak Builders has been one of the most rewarding picks for us in recent months. We had suggested this stock for entry around the 130 levels, with a short-term target of 138 and 141, and a long-term target of 175. One by one, all these levels have been achieved exactly as planned. From 130 to 175, that's a return of nearly 35% in a very short span of time, which is a solid outcome for positional traders. Now, on top of this price performance, the company has also declared a dividend of 1 rupee per share, which is a 10% payout on the face value. The record date has been fixed for September 20th, and the AGM will be held on September 27th, after which the dividend will be credited to shareholders' accounts. So if you are holding the stock, you are not only sitting on good capital gains, but you are also set to receive the dividend in your account soon. The natural question is, what should you do now? Should you hold the stock further, or should you book profits and exit? Let's understand this with some perspective. Our initial view on Deepak Builders was based on attractive valuations and improving financial performance. The stock has now re-rated and moved sharply upwards, reaching the levels we had targeted. In the short term, valuations have become fair, and the risk-reward is no longer as attractive as it was around 130. For short-term traders, it makes complete sense to lock in profits here. Targets have been achieved, and with dividend also coming in, this is the right time to take money off the table. Remember, discipline is important in positional trading. When your target is hit, the best strategy is often to book gains rather than get greedy for more. For long-term investors, the story is slightly different. Deepak Builders is still a decent company, with steady earnings growth and a positive outlook. But since the stock has already rallied a lot, fresh upside in the near term may be limited. So even for long-term investors, booking partial profits, enjoying the dividend, and then rotating into other value stocks with better entry opportunities is a smart approach. You can always revisit Deepak Builders later if the price consolidates or gives a fresh value zone entry. At this stage, the smarter move is to look for the next set of undervalued stocks where risk-reward is in our favor. The Indian market is full of such opportunities. By rotating capital into new positional picks, you can continue compounding profits rather than staying stuck in one stock after it has already delivered. So to sum it up in simple words, Deepak Builders has rewarded us exactly as planned. From 130 to 175, both short-term and long-term targets have been hit. A dividend has been declared, and investors have made handsome gains. If you booked profits, congratulations. If you are still holding, you can exit around current levels, collect your dividend, and then shift focus to the next opportunity. That is how positional trading creates consistent profits, by entering at value levels, booking at targets, and rotating into fresh picks. Disclaimer: this analysis is for educational purposes only.